Give me 1 second here. Great. So once again, thank you everyone for joining us. I am Hillary Butler. I am the development manager at HFLA of Northeast Ohio. We are very excited to be able to host this workshop with our partners at Citizens and with our awesome expert, Keisha. We've been able to host a workshop like this before, and we found it was a great resource to offer not only our HFLA loan recipients, but also to our broader community. Before we get started, just a few housekeeping things. Please keep your mics muted during the presentation. This is mostly just to eliminate any background noise. We want to make sure that everyone is able to get all the valuable information that Keisha is providing, and we will have plenty of opportunities for folks to come off mute to ask questions, things like that. I also ask, and as many of you have done right now, which is great, keeping your cameras on. It really just makes it a much more communal environment, and it's nice for us, the presenters, to really see who we're talking to. So a little bit about HFLA of Northeast Ohio. We are a 120-year-old nonprofit based in Beechwood, Ohio. We provide interest-free loans to people who would otherwise not have access to conventional financial resources, i.e. bank loans or loans from a credit union. The loans we provide are particularly on a needs basis. So people that have financial emergencies that they really just don't have any other financial options. There are 3 loan types: the standard loan, which does address the emergencies, an education loan for students that are attending either vocational programming or undergraduate or graduate school, and then finally our small business loans. As I kind of said before, if you have any questions about HFLA's programming, you can always reach out to me, you can call us, or you can just email me afterwards. And so I will be passing it over to Keisha here. She is multi-site manager of retail banking at Citizens and has over 25 years of experience in the financial industry. And she has helped us a lot in the past with putting these workshops together. And she really does enjoy helping people reach their financial goals. And we're excited to be able to have her expertise here today. So Keisha, I will pass it over to you.
Thank you. Thank you. Hi, everyone. As Hillary explained, my name is Keisha Wilson. She already told you I'm a multi-site branch manager at Citizens Bank. And financial literacy and financial education is super important to me, not just because it's what I do for a living, but because if I knew then what I know now, it could have saved me so much, you know, and it could have saved me money, it could have saved me time, it could have saved me stress, it could have saved me just a lot of things that you find happens when you don't have either a good credit score or if you are not, you know, financially stable. So it's so important to me to make sure that I'm, you know, speaking about my own experiences so that people know, you know, hey, it's not just because I'm a banker here at Citizens, but it's, you know, I've lived this life and I want everyone to not make the same mistakes that I've made. And going forward, I don't want to repeat the same thing. So making sure that I'm consistently talking about financial literacy is why I do what I do. So before I get started, I want to just think about if I would have knew then what I knew now about my credit. Like if you think about that statement and you say, wow, you know, if it was one thing, if you can put in the chat, like what kind of things would that be? I know for me, it would have been don't max out your credit cards. Don't sign up for t-shirts at the baseball game just because when you're 20 years old and you want a t-shirt to root for the home team. So, you know, it's, let's see. It's expensive being broke, literally. Yes, Belinda, literally. It is very expensive being broke. What else is out there? Never would have taken student loans. Don't help others with your credit. Yes. Never would have, let's see. Establishing yourself before you can establish everyone else. Now, that one is so true. So many times we are taught to always help. But sometimes if we give more resources out, then we have depleted our resources for ourselves. So it's important to make sure that we are financially stable before, we go forward. So with that being said, think about how satisfied currently you are with your credit score. Are you not satisfied at all? Do you got this in the bag and you're just here to, cheer everyone else on? Or are you indifferent? I will let you know that me personally, I am in the neutral, very satisfied category, like right on that line, but I'm looking to get in that top green box, the extremely satisfied. So a little bit about me. So as Hillary stated, Citizens Bank, I've been in banking all my life. So you would think, oh, wow, she's been in banking all her life. I started banking back in 1994 when I worked for a bank called MBNA. And MBNA was a credit card company. And what they did was they sold affinity credit cards. So you had the Cleveland Cavaliers card, the Browns card, you had NASCAR, you had PPG, you had all these different credit cards. And that's where I started my career. So I learned about credit super early, and I learned that you can get it super easy at that time. So what I didn't know is how quickly that credit that I had just received could impact me negatively. So I worked at MBNA, and then I went and I worked in mortgage at JP Morgan Chase. And that was so great. I was a collector. I was, one of those people who in turn called me like, ring, ring. Hello, this is Keisha with Chase Bank. I'm calling to see if it's time to pay your bills or pack your bags. I was in what was called later stages of collections. These were people who were behind on their mortgages 365 days to even more. And it was time for us to, foreclose on their property. So with those jobs, you would think, wow, she knows the credit game. She has it all together. Well, let's fast forward. I got married young, had kids young, and me and my husband, we had bought our first house, and it was a great house. It was huge. My mom's calling all her friends to tell, them, oh, wow, my baby, she did it. You know how mamas do, like, look, my baby did this, my baby did that. Yep, that was my mom. I'd come home, she'd be on the porch, ready for me to let her in with her friends so that they could sit in my beautiful home. But what was happening secretly in 2008, does anyone remember, and you can come off mute if you remember, what happened in 2008?
The housing bubble burst.
The housing bubble burst, right? Now, at the time, my then husband, he worked in mortgage. So he's like, no, it'll be fine. It'll be fine. And I'm like, okay, because, oh, by the way, what I failed to tell you all is that this particular home was $300,000 that I got in my own name, and I was only making a whopping $13 an hour. So how is that even possible? That was back when you can just say what your income was. You could say, they did no document verification, and they also just went ahead and, said, hey, you got this loan. How much do you want? When people say back in the day, I used to go in the bank and I would shake their hand and get a loan, it was very similar to that if you think about it. But the housing bubble burst. And at that point, 2.5 years later, I lost my dream home, the home I had built, $300,000 house. My mama's embarrassed because, of course, she told all her friends about the house, and they're like, oh, we're going to your daughter's house for the holiday. And at that point, we couldn't do it anymore. From then, I made it my mission to make sure that I was more financially stable than, that. I didn't want my children to go through this. So that's when I started saying, you know what, I have to make sure that no one else repeats the cycle. So that's a little bit about me and why I do what I do. That's why I'm so passionate to talk about financial literacy and how it's so important to make sure that you are helping yourself first, you are saving for a rainy day, but most importantly, to know what credit is and to understand credit score and how you can use credit to, help catapult you for future success financially. So this is the agenda that I'm going to talk about. The importance of credit. We'll do some credit report basics and credit score basics. Factors of a FICO score. Tips on how to improve your credit score. And then we'll do a little activity at the end. Okay, does that sound okay, everyone? All right. So, Tiffany Riggs worked at MBNA and all of her friends. That's awesome. And then I see people in terms of credit score, they're slightly satisfied and neutral. So same thing. So credit reports and credit score basics. Your credit history can affect your access to your credit, loans, jobs. People don't really understand that, but that's true. Housing, insurance, and other important services. A credit report is just a document. It's a document of your credit history. And financial institutions use these reports to help them access your ability to repay the loan or credit card. Credit reports are also used by employers as a part of your background, to do background checks, and also your landlords. They look at your credit report for housing application. So people may say, but credit report, like I still don't understand. So I tell you, picture this, think of this. You have that one friend who every Tuesday says, hey, I don't get paid till Friday. Can I borrow $5? And Friday comes, they pay you back. Tuesday, hey, can I borrow? Okay, give them the money again. Friday comes, they pay you back, and it keeps going. It's a revolving, but sometimes you got that other friend who never, ever pays you back. And when that happens, you're like, nah, they can't borrow again, or their credit is bad with you. They do not have a positive credit report just because of their payment history over the time. So a first step in being able to understand your credit report is to understand what it is and what it is not, and what's included in your credit report. So there are two significant factors in your credit score, and it's whether you repay those obligations on time, and pay it as agreed. Also, there is it's called a credit utilization. It's how much you use in relationship to the approved amount that they lend to you. So in terms of like a credit card, if the credit limit is $1,000 and how much of that $1,000 you use. So the two significant factors that affect your score, those can really impact, and those are the key drivers of your credit report. And people with higher scores, they present a lower risk than people with lower scores. So think about that friend, the friend that pays you back and the friend that never pays you back. Who would you be more likely to lend to in the time of need, right? So one key thing to keep in mind is that our credit history and our scores are ever evolving. So just like me in before 2008, I had an 800 credit score. When I lost my home, it went down. I think it went to like 5 something, and then it bounced back up, right? So it's ever evolving, and it's possible if you have low rating, if you keep taking the steps necessary, paying your bills on time, it can improve your credit score. But remember, it goes the other way too. So if you miss a payment, it can go down as well. So with that being said, hold on one second. There are 5 factors in a general FICO score model. So the 5 factors are your payment history. This accounts for 35% of your score, which is why making payments on time is so crucial to having a good credit score. Amounts owed also is 30% of your credit score. This considers how much you're utilizing. For example, again, if you have a credit card and it's too close to the limit, it's going to negatively impact you. If you miss that portion of the pie, then definitely it's going to be harder for you to have a positive credit FICO score. Your length of history is also considered. Well, someone may say, well, Keisha, why is length of history, considered? Well, if you borrow money from me one time and you pay it back, like, oh, that's great. But if I know for fact, because over time, someone has made payments for 30 months and they pay on time or before, their credit is stronger. I have more data to support my reasoning and rationale to lend to them. The credit mix, that is the type of credit you have. That's important too. Credit card, mortgages, student loans, retail accounts, etc. So I had a friend who really didn't care about credit, but they cared about their car. So their car, they paid always on time. Anytime they needed to get a car loan, I think they had Nissan at the time. Anytime they, needed to turn in their car or get a new car because they had great credit with Nissan, they knew that this particular person valued that car and they always paid that car on time. They paid the majority of things, but the car they never miss, always on time. Some other things you may not, care about. And sometimes people can't see tangible things such as credit limit on a credit card. You can't see that money because you may not use it, but a car, if it's in your driveway, if you're going to use it. So it's super important to have a mixture of credit because that grade helps solidify. And again, it's only 10% of your score. And then new credit, 10% of opening new credit also factors into your score because multiple new applications for credit could mean that you have a strain on your finances, right? So Keisha, explain that further. So remember, I lost my house, then I needed money, then I started applying for credit. And then it was, oh, this bank turned me down, this bank turned me down, because they see ding, 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 ding. So they're like, oh, she's flailing, she needs additional credit. And our opportunity to repay, lessen because I was, at that point, my score was low, right? Now you may say, but hey, I thought that if you purchased a home or if you did a car that you can shop around. You absolutely can, within 30 days, you want to make sure you keep that time frame within 30 days or so that they know, hey, you're just shopping for rates. You're not flailing, trying to get more credit because you're underwater. Because when your credit cards are maxed out and you keep applying for new cards, it's saying that you need additional resources, right? Is there any questions about that so far? What happens to your credit when you pay more than what is required monthly? Well, I'm glad you asked. Think about it yourself, Leslie. So say, for example, I borrowed from you $500 and I said, oh, Leslie, I'm going to pay you $1 a day for 500 days. You might say, all right, let me give it to you because Leslie's awesome and she has all the money in the world. And she said, he says, you know what? Let me go ahead and give Keisha this money. But Leslie, wouldn't you feel a little more, wouldn't you feel better if Keisha paid you earlier than that 500 payment, but paid you maybe $10 a day instead of dragging it out over time? Don't you want your money back faster?
Yeah, for sure.
For sure, right, Leslie? For sure. You want your money back faster. And, it's so important to pay and pay more because it shows, hey, Keisha's not reliant on the money. Maybe she just had a quick, obstacle that she needed to overcome. Maybe her money's was tied up in some sort of investment and she couldn't pull from it. Maybe her savings is locked in a CD and she can't pull from it, but she needs to utilize this money quickly. And oh, by the way, she paid it off faster. So it doesn't necessarily hurt you to do that. So another question is what is a good credit score? So if you look on this grid right here of what is a good credit score, is this for the most part what you thought? 300 is bad, 850 is great, exceptional. How many people didn't even know 300 was a score? I see you laughing over there, Mary, like, right. I didn't even know 300 was a score either, right? So it's super important to know what a score is, or what the range of score and where you fall within that score. So again, FICO scores range from 300 to 850. The higher your score, the more likely you will qualify for loans, for housing, for insurance, and other certain employment. It's important to note that no matter your score, you can always take steps to manage your score. Paying your bills on time and as agreed will have the greatest impact on your score positively, right? And credit reports for minors. Sometimes people will ask that. So, I have a minor child and I have questions about them, and, you won't have a credit score until you're 18, but is that true? Is it not true? What can I do to catapult their score? If you fall into that category, hold on one second. If you fall into that category, one thing that I did for my children was when they turned 16, I personally added them to my cards as authorized users. Now, I saw someone in the chat said, don't let anyone borrow your credit. And I agree with that. Let me tell you guys really quick, my kids had no idea that they were on my credit cards. My daughter would have been like, oh my God, I'm going shopping. It would have been a real problem, right? So it's super important that if you allow someone to borrow your credit, if you allow someone to use your credit, that they are credit worthy, that they're not going to abuse your credit. Because, oh, by the way, when you let someone become an authorized user on your card, you are authorizing the usage that they can use that card. That's why I didn't let my kids know. When they turned 18, they were able to get student loans on their own because they had 2 years of established credit history.
So it does start, I'm sorry. So it does start building their credit.
Yes.
Okay.
Yes. But again, if your kid's like my daughter, she would have been like, Mom, it was an emergency. It was a sale.
So
and
I kind of did both. I told her, but I also told her, I had her sitting with me and I told her why I was doing it. And I told her, and this is where it kind of, we collided, because I said, you will get a card in the mail. That's not your mail. That's for me. And that card is in a drawer. So my usage, and I was explaining to her, my usage will benefit you. And I really pay attention to that card. So that was my follow-up question.
Yes.
That card that she's on is the only one that will impact her credit.
Correct.
Okay. So my whole credit file will not reflect on hers.
Yes, you're absolutely right.
Perfect.
And even I had a card, I think it was like a store card, and it had a lower limit, and I never used that card. So I put her on that particular card, and I made a purchase. It may have been a gas card or something. I made a purchase and I paid it off, and I made a purchase and I paid it off. So it was being used. So payment history was being established. But again, I did not let her have that card. So good job, Mom, because my kid, again, she would have bankrupted me, just so you know. But tips to improve your credit.
Keisha, real quick,
Yes.
Would you want to, Deepa asked if we could repeat that really quick.
Yeah, sorry, my daughter just turned 18, and I think this is really helpful. And she didn't want anything of her own, so she took her dad's credit card with her. So what are you suggesting?
So while she's taking her dad's credit card because she doesn't want anything on her own, I'm assuming, Deepa, she does not want to get herself in trouble. She doesn't want to mess up her credit, because while she's taking her dad's card, though, she personally is not building her own credit. So what that means is, say if she came or went to a bank and applied for credit, we would say she does not have any credit. And when that happens, sometimes having no credit could be the same as having bad credit, because we don't know how you're going to pay back, right? So what I would recommend, Deepa, is putting her as an authorized user on one of your cards and maybe keeping the card with you. That way you can help establish credit history for her. So when it's time to utilize the credit, she will have that already established.
Okay.
Does that
that's
make
helpful.
sense?
That's very helpful, because right now what she's doing is she's not using the card, but she's taking cash from us. Like, she's very, very mindful about how she spends, because she knows it's expensive. So she really, doesn't really spend at all. So she takes some cash, like $100 or whatever, like $200, and she really keeps an account on it. But I think adding as an authorized user, I think might be really helpful. Okay.
Absolutely. Absolutely. I also saw a message in the chat. It says, when creditors want to increase your limit, does it hurt you? It does not hurt you. In fact, it actually helps you because it's improving your utilization score. However, when they reduce it, it does lower your utilization score. So it's important to make sure you're managing that. What is the youngest age you can put an authorized user? That is determined by the financial services institution. Each company has their own set of rules of when. So you would just need to check with your local or your financial institution that you are asking to add credit to. Okay. So we talked about what good scores are. Now let's talk about ways to improve your score. So build your credit file, and to do this, open accounts that will report on your credit. This is helping to rebuild your score or to improve it. Typically, lenders of credit report to all 3 major credit bureau agencies. If you are an authorized user on someone's credit card, this can help to improve your score. Now, again, please note, if they go crazy with your card and start swiping and shopping, that could negatively impact you. So please, please, please ensure that who you are allowing to use your credit is someone who is, reputable. It's important to make sure that you trust them and that they will do right by you if you are doing a service to them. You can also self-report some credit. So utility payments, certain credit bureau agencies will allow you to report on-time payments for maybe gas, lights, those things. And that can count as on-time payment history for people who don't have any credit established. Don't miss any payments. And I know that's hard, but I tell people, if you are at a crossroads where your money is only at a certain amount, if you can, please always pay creditors that report to the credit bureau agency, if you can, right? Sometimes you may have to put gas in your car and you can't pay the $25 minimum payment or whatever that is, but you want to never miss a payment, right? So my kid just the other day came to me and said, "Hey mom, remember when you told me never miss a payment?" And I was like, "Yeah." He was like, "Well, I have a payment due." And I was like, "When is it due?" He was like, "It's due tomorrow." I forgot. And I booked a trip and this and this, and my head was about to explode because, of course, I had those same mistakes too as a young adult. He's 23. But at the same time, I drill it in their head, do not miss a payment. And if you're about to, please let me know, because I would rather help you than to have your credit hurt you, right? Catch up on past due payments. While late payments remain on your account up to 7 years, having your accounts current can help with improving your score. If you're having difficulty making your payments on time or paid as agreed, speak to your financial services institutions. Sometimes they have things in place that can help you. They may have forbearance or deferment options that may not affect your credit score, right? So if they can help you and they have programs to maybe pay this month a payment and a half and the next month a payment and a half so that you're not late, that could be, wise to do. Paying down revolving balances on accounts. So again, if you got 5 credit cards and they're all maxed out, what does that say? It's saying you need those credit cards to live, to survive. You want to make sure that you're not living all the way to the limit. I had a customer say, well, why would you give me that amount if you don't really want me to use it? Now, please understand, us as financial services institutions, we want you to use it because, if you don't have a 0% credit card, that's how we make the interest. So we want you to use it. We want you to, make your payments on time, and we want to lend because that's how we get paid. So we want to make sure that you are credit worthy, because sometimes people just don't pay back because of whatever reasons, whatever circumstances happen, pandemic, loss of wage, loss of job, whatever your scenario is, because life is real. And that is one thing that I've learned, is life is real. You want to limit how often you apply for new credit and new accounts. Opening new accounts will decrease your average age of your credit history, your credit file. And that can negatively impact your score, while inquiries on your credit reports have minor, very minor effects on your credit score. Having too many accounts makes your credit age adjust. And then check your credit score often. You want to make sure that when you are, that you're knowledgeable about your score, that hey, wait a minute, I got an inquiry. How did that inquiry go there? How did it, get on my account? I never applied for this. How did this happen? Because fraud is real and fraud is running rampant. And you want to make sure that nobody was able to access your credit file. So we talked about a lot, and I charge you guys to take steps and take action. Say, how can I access my credit report? And these are ways that you can access your credit report. You get 1 free credit report annually on the following website listed. And also, you can ask for it by mail. You can also access the TransUnion credit report. In addition, Equifax and Experian. Now, sometimes you may see like 3 and 1 and things like that, but this is how to get your actual FICO score from these individual companies. So what will you do going forward? We talked maybe about 35 minutes or so. What type of things will we do to enhance our credit? How will you do it? Will I share my plans with anyone else? And if so, who? One thing that I found is sometimes we get information and we hold on to it and we don't share the information. I charge everyone, each one teach one. Hey, this is how you do it. You know what? You got a kid going to college. Let's go ahead and help them with their credit. So mom or dad doesn't have to always take out the student loan, or even make sure that they, if they qualify, that they speak with someone who can help avoid loans altogether. Credit score, and this is the last thing I will leave you with. I remember I told you guys in terms of credit and rating my own credit, I was in the middle of the road. I had went with my best friend. She was trying to go buy a car. Her car had died, and she was maniacal about credit. Like, it was insane how ridiculous she was about credit. But the great thing about her is she had an 847 credit score. We went to Lexus. She walked in. She did not look at any cars. She said, I need to buy a car. They said, how much? And they're trying to wheel and deal. And she said, absolutely not. I want to talk about the money first. Long story short, she ended up with a 0% interest loan, which was amazing. So you know me, I was like, oh, let's do it. I want one too, right? So I wanted to be like her. So I actually, at the time, I applied. I was approved too. I was like, this is great. But then they were like, and your rate is, I think it was like 2% or something. I was like, well, wait a minute. So we were getting, if we would have got the same car, I would have paid 2% on the loan and she would have paid no interest on the loan. And I said, you know what? Let me get this together because it's so important to make sure that you're taking care of your credit so that you can use someone else's money for free. So it looks like there's some questions in the chat. The hard part about a situation is when to reapply for credit. Leslie, that was a great question. When should you reapply for credit? So one thing that I have done is I've asked, ask the creditor, how soon can I reapply? If you know that my credit score is the same number, the same exact number from when I applied the first time to that I applied the second time, you shouldn't reapply because it's going to be the same outcome, right? If my credit score is 600 and maybe their minimum is 680, 700, then that's just putting an inquiry on your credit. Now, please understand, lenders cannot discriminate from you applying for credit. If you want to go for it and you want to apply for credit, they absolutely will and must by law take your application. But it's important for you to do your due diligence and ask those questions. Hey, while you may not be able to tell me your exact qualifiers, typically those that get approved, what type of credit score do they possess? If they say a score that you do not have, you may want to hold off on that. Okay, that was a good question.
How long do inquiries stay on the credit report?
2 years. 2 years. And what I've also done is make sure that if an inquiry appears, try to keep track of, what credit report that posts on, right? Because credit reports, there's 3 different bureaus, which means there's 3 different scores because not all companies report to all of them, right? So company TransUnion report may be one number and Equifax may be totally different, right? So if you know the lender that you're going through, that could also help the approval odds for that. Did that make sense, Melinda?
Definitely.
Okay, perfect.
Is it, I guess the best way for me to say it, because this will stop me, acceptable to ask a creditor like what bureaus they work with or that they seek?
Absolutely, absolutely. Let me tell you, Belinda, when it comes to your finances and your credit, there is no question off the table. Mr. Creditor, what credit bureau agency do you all pull? And then right there, if they say, hey, we pulled this one and it's your highest score, great, let's go for it. I would also, again, ask, typically around what score does that, the people you have approved, around what number are they at? Because again, they have to take your application. So I don't know if you've ever went to a car lot. Oh, my best friend. And when we went to Lexus, they wanted to run her score. And she said, absolutely, you can only run it through Lexus. So if you've bought a car before, sometimes you'll have 10 different inquiries at one time. She only wanted one inquiry, one company, and that was her one shot that she was
Okay,
doing.
I have a question.
Yes.
So I just, for the first time, financed a car.
Woo!
I had read somewhere that you should, before you even go to the lot, you should have already secured financing. I've been banking with Capital One for years, so I went with them. They gave me a pre-approval
Yep.
for like 35,000. Here's where I am now. So my expectation, because I had this pre-approval for financing that was guaranteed, I go to the lot, I found my car. Now I have all these inquiries from all of these other creditors, and I don't know, why are you even, I didn't ask you to find financing for me. I came to you, the first thing I said to you was, I have a pre-approval for this amount. I intentionally chose a car well beneath that amount. Why? So I don't know if that's something that I should be challenging, because I was never asked if they wanted to. I just started getting letters. It didn't even occur to me that this happened until I started getting letters saying, I'm sorry. I'm like, sorry for what? I didn't ask you for anything.
Yes.
So I don't know where I am right now or what happened.
Yes. And while inquiries impact your score minimally, if it's 3 points a hit and you have 30
Exactly.
Inquiries, it could really lower your score. So when you went in, typically they would say, oh, just sign here. This is for us to authorize. And I'm not sure if it was slipped in, but typically there has to be some sort of authorization completed prior to. But I would dispute and go from there.
Okay.
Okay. What other questions are out there?
Consolidation loans.
Consolidation loans. What's your question about them?
I don't know, like credit wise, what is the thought on does it make sense if you are trying to be strategic and improving your credit score? Like, I mean, I know I would not ever consider them if I can afford all my bills, but if I think as a strategy, does it make sense?
So what I will tell you is a personal way that I did. And I have 5 credit cards, and I knew that those cards were going over the utilization rate that I wanted, which was 30%. Okay. And, sometimes I'm a victim of the swipe. So now I leave my card at home because I've been healed, guys, but sometimes I swipe a lot. But I put those cards away and I consolidated them and had one monthly payment each month to pay it off. Now, 2 months later, my credit score jumped a lot of points. Does anyone know why? Do you know why, Belinda?
My guess would be because you had a new line of credit and that's reporting and you're paying on time. Your utilization for the other 5 cards are all at 30% or below, depending upon how you did it. And that's shown over that same period of time because you're leaving the card at home.
Absolutely.
So you're not charging in the interim.
Absolutely. Look, Hillary's over there doing the snap. That's exactly what happens. Okay. And so now, don't be like my friend who did the same thing and then she started using the credit cards again. Now
because she has available credit.
Oh my God. I'm like, what are you doing? Right? The goal is to become financially free, right? So it's so important to make sure that you are consolidating to pay off, right? Now, someone asked me before, what if I pay everything to zero? Does that help me or does that hurt me? Well, again, I don't know if you remember, when lenders are looking, they're trying to see your willingness to pay back because, oh, we want to give because we make the money off the interest, right? But we just have to make sure that we're going to get paid back. And the way we see that is with your utilization and your on-time payment history. Okay. Does Metro 2 really work? I'm not familiar with Metro 2. Tiffany, can you explain just a little bit?
Yeah, so apparently it's some kind of automated like letter generator to creditors, like to remove things from your credit. I'm just wondering because my credit is within the good range. Of course, I want it to be better, but I'm fine with that. But I just been hearing people talk about you can help other people to fix their credit with these Metro 2 automated letters that are generated.
I'm not familiar. However, I do know when you dispute things from your credit, sometimes they come off, sometimes they stay on, right? The goal though is if the debt is within a company and it's sold to another company, it reports as a new charge on your credit and a new negative charge. So I don't have enough knowledge about the Metro 2 to really give a should you or should you not. But what I will tell you is making sure that you are disputing things that are not accurate on your report and staying ahead of that. Or if, say, for example, I charge something off and I want to get it off of my credit report, try to negotiate with the lender and say, hey, you know, if I pay this in full, can you take it off my credit report, ask for a letter, something like that to get it removed. And they don't have to, but some creditors will. Especially, you're welcome, especially if it's a consolidation loan for student loan, then what from there? So consolidating with student loans. So it's a little tricky right now. And the reason I say that is because depending on how many times you went to, how many semesters you went to school, if you did student loans, you can multiply that by the number of semesters you have, and you have many different student loans on there, maybe 8+ if you did 4 years, and it's semesters. But if you consolidate with the student loans, be mindful of what your goal is in consolidations. So while, for example, my bank does student loan consolidations, and you know, it's great for like Parent Plus loans and things like that, but we want to make sure that you are not consolidating from a public forgivable loan to a private loan that you will have to in turn pay out, if that makes sense. Keisha, what do you mean? If I am a doctor and I've consolidated all of my loans to a private company, is no longer a federal loan, which may be forgivable. So you want to make sure you're really doing your due diligence on that.
I've been seeing a lot of stuff about asking for your information. I don't know if I'm wording this right, but asking for your information to not be shared from like LexisNexis, and I think is one other one. Does that hinder you or harm you in any way? So
No.
a creditor can't, or is it possible for them to deny you credit because you don't allow your information to be shared?
It depends. So some companies say, hey, like for example, my bank, we share your information within our company, meaning citizens may say, hey, you, Belinda, are pre-approved for a Citizens credit card because you have a Citizens bank account. Okay. If you say, no, I don't want that to be shared, you could potentially, you know, for that particular portion of it, meaning not sharing your actual account information, and it's something that we do, we may not be able to have you as a customer for that. Now, we do have a privacy policy that you absolutely can opt out of from sharing across other organizations. So if you said, hey, Citizens, do not share my information with the Cleveland Cavaliers, we absolutely would not share your information. But if it's within that company, then you know, you may have difficulty. Before we start, oh, okay. And then Hillary, I'm gonna turn it over to you really quick.
Can I ask one last question?
Absolutely.
Okay, so when you went through how to improve our credit, I wrote a question down. How long, like let's say I say, okay, I want to try this on the list. How long should I like when I go back to look at my credit report, like Credit Karma, for instance, and I'm looking at my scores on a regular basis, what's the turnaround to where I should see whether that thing I chose to do is having a positive or negative impact?
So when you're looking at your credit report, one of the things you want to look at is your statement date and the reporting date on there, right? Because to your point, Belinda, you want to make sure that the steps you're taking is something that is helping or hurting. With the statement date itself, that's the date that the company reports to the creditor typically. So if I know the 13th of the month, I lowered my credit score, or excuse me, my statement balance by the 13th of the month. So when it reported, it didn't say I owed $500. It showed that I owed $300. I would wait 1 to 2 more statement cycles.
Okay. So the statement date is the reporting date?
So when someone has a credit card, it'll say the statement date, it's from this date to this date, and the payment due date, right? The statement date is the last day of that statement cycle that is captured for your balance, okay? That date, that time is typically reported over to the credit bureau agency, right? But maybe the credit bureau agency itself may not update until like the end of the month or so, okay? So that's why you want to give it to like 1 to 2 more months.
And that's the amount that you are charged interest on too, isn't it?
You got it.
Okay.
You got it. All right. Now I am. Oh, thanks, Diane. So in the chat, Hillary put my information, how to reach me for one-on-ones. It has both of my office locations. As she mentioned, I'm a multi-site manager. So when you call, I could be at either one of the locations. So there's 2 different phone numbers. One is 216-595-6581, or you can call 216-706-7153. Now there is also an online way to schedule an appointment. You can go to citizensbank.com and then follow the steps listed. If you wanted to take a screenshot on your cell phone to take a picture of the steps, please go ahead and do that.
I will be sending an email out after our session. This will have Keisha's information on it, and it will also have information with HFLA on some of where you can find more information on our interest-free loans. We do provide debt consolidation loans, but everything is case-by-case basis. So being able to talk to somebody from our program department about anything that might be a good fit for you in terms of building credit, things like that, we can put that together.
Absolutely. And then Hillary, I'm gonna turn it over to you.
All right. So I think that we will be wrapping things up now. I've gotten you information for Keisha. You can kind of chase her down, get any other questions you might need answered. And of course, I hope you all have my information by now. I will put in the chat here, both the HFLA phone number and my email. So that you can, hold on, I cannot type and talk at the same time. And then, so that is my phone number and email for HFLA of Northeast Ohio. Like I said, we do interest-free lending, and we do try and find a way to reach as many people as possible in a way that suits them. All of our loans do report to the 3 main credit bureaus. So any loan that you receive with us is a tool that will be building your credit. And I think, Keisha, if you want, I think we can wrap it up. Does anyone else have any questions before we head out? No, that's great. The recording will be sent as well in a follow-up email, and it will be located on our website. So you can share that with folks too, okay?
Thank
Will
you
y'all be
all
doing
for your
this again?
attention.
Sorry, what was that?
Will y'all be doing this again?
I think so. I think we're gonna try and have another one of the credit building sessions in the fall.
I wish I had brought my 16-year-old, but she'll definitely be with me if you guys do it again.
Great, thank you. And in our follow-up email, if you have time to just take a quick survey, get your feedback on what we did today, it's just really helpful for us to be able to make these better in the future. All right, folks, well, thank you.
Thanks, everyone.
Thank you. Good night.